Live from Bloomberg's World Headquarters in New York, I'm Shonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance.
And in just a moment, Tim, we're going to have a live exclusive interview in studio with Galaxy Digital's Mike Novogratz. We're going to discuss everything from Bitcoin to Ethereum to lending.
Plus, later, we'll be joined by Coinbase's head of protocols and the creator of Base, Jesse Pollack. As investors await potential Ether ETFs, we discuss Base and how the real future may lie more with on-chain technology.
And a multi-million-dollar loan backed by a violin that was once owned by Russian Empress Catherine the Great. We're going to discuss how the loan is a sign on how Galaxy Digital is broadening its lending business to wealthy clients. And now we are joined by Galaxy Digital founder and CEO Mike Novogratz. And let's just start with the simple things. Let's start with Bitcoin in the crypto world, because we are flirting with that $70,000 level. And you sit here, we have been around this space for a while now. Is there more upside risk or downside risk as you see it now in the crypto world?
Listen, I think we're getting skewed to the upside. I mean, just the fact that we're here at a crypto show and Bloomberg shows how long we've come since 2015, 16, 17. But we kind of got to the finish line. And when I say that, DC has finally agreed in principle that crypto legislation has to happen, that it should be bipartisan. We still have a couple holdouts, but the last few weeks have been unbelievably positive in pushing the Democrats forward, seeing this. They don't want it to be a political issue. And so that which was a headwind is becoming a tailwind. It's not a full tailwind yet. We have governments that can't stop spending money, and so that just is so powerful for the Bitcoin narrative. And then all of a sudden you hear, wait a minute, the state of Wisconsin's pension fund bought $140 million of Bitcoin. And so as we get more pension funds in, more institutions in, there's not a lot of sellers.
So the question we know you hate then, where do we end the year?
Listen, if we take out the 73,000 in the next week or so, we're going to end the year at 100,000, somewhere around there, or even higher. Markets work, they create ranges, and when the top of the range breaks, you have a nice extension. And so, the bottom of that range started around 40, so 40 to 70, the 70 goes to 100. And so that's a good enough target.
Okay, we saw spot Bitcoin ETFs already get approved this year, and we've seen a lot of inflows there. So it makes me wonder what the next catalyst is for Bitcoin to actually break 73 and get to your year-end target of 100,000.
Yeah, so I had the same question asked to me, 5 weeks ago, and I said, I don't think it will unless we get one of two things happen. More regulatory clarity, which I thought was a low probability at that point, and or the Fed starting to move. We're getting the regulatory clarity. And even though it's not perfect, we got enough that people now realize this is coming. And why is that important? What does it mean? So if SAB 121, this arcane accounting bill, in time gets overturned, it allows Bank of New York and State Street and others to get into custody. If the infrastructure bill, if the FIT 21 bill gets approved, it allows Goldman Sachs and Citibank and all these other people to start doing sales and trading. And so as you bring those institutions in, huge money follows.
The Biden White House said it would veto that overturning.
The Biden White House vetoed the SAB 21, and then they said they wouldn't veto. And so they were talking, this was really sad what happened, because Donald Trump stole the show. He basically came out and said, I'm your crypto president. The same day Biden had said he was going to veto this thing. Why would a sitting president talk about vetoing a arcane accounting rule? And so that turned the whole crypto community into Trump's corner. And it almost was like a purity test. People said, if you don't vote for Trump, you're not a crypto person. And finally, the Democrats heard. And so real quickly, 9 Democratic senators voted not to support that accounting rule against Elizabeth Warren's wishes, against the SEC's
I'm going to steal Tim's question here. He asks all our guests this. I'm going to ask you, at the end of the day, who would be better for Bitcoin? Who would be better for crypto, Trump or Biden?
Listen, what is so clear to me is it's the wrong question. What is good for our industry is a bipartisan support of bills. Otherwise, you're going to be student body left, student body right. Listen, these elections are going to swing back and forth for a while. And so crypto shouldn't be partisan. The short answer is right now Trump would, because he says, I'm crypto president, I'm going to do all this stuff. But it's it's a short-term way of looking at things. What we've done a really great job of, and shout out to Brian Armstrong and lots of people in the industry, our own Tyler, we've got our own lobbyist in DC, is educating people on both sides. And there are tons of Democrats that are for good crypto legislation now.
So many people who are pouring money into elections right now and into lobbying from the crypto community. What's the scale? How much influence do they really have? As someone, frankly, Mike, who's a traditional way donor as well as a crypto donor.
The scale has gotten big. That's why the Democrats woke up. There's been about 150 million, on its way to 250 million dollars in these crypto super PACs. That's not all crypto money. What happened was when the Democrats kept saying we don't like crypto, and again, it was a very small group. It was Elizabeth Warren who said, I want to have an anti-crypto army. The way politics work in DC is every senator doesn't know every issue. They look to the leader of that committee. So Elizabeth really was running crypto for the Democrats, and she hates crypto. So all that money started to look like Republican money, even though it was supposed to be bipartisan, and focused on really key races. Sherrod Brown's race, John Tester's race.
What would you say to someone watching right now who might say, you know what, the SEC and lawmakers, it's their job to protect people from getting involved in things that could hurt them? And there are some people out there who say, well, there are a lot of people out there who say, I don't want to touch crypto because I've seen how volatile it can be, and I don't think it's something that, mom and pop folks should have in their portfolios. I see you laughing, Mike.
Well, because quite frankly, anyone who bought Bitcoin, with the exception of one or two people that bought it over 70,000, has made money. Like if you bought Bitcoin and held it like most Bitcoiners do, you're in the money. So they're protecting them against making money. That makes no sense. Listen, there have been frauds. There have been lots of, shenanigans in this crypto space, and those need to be prosecuted. And they were. They were prosecuted. They were pushed out of the system. Sam Bankman-Fried's in jail. Other people will go to jail. And so I'm not saying this was a lily-white industry in any space, but this idea that we're going to protect somebody from this new technology that cuts out the middleman, that allows people to transact directly instead of paying a fee, is just wrong thought of.
Okay, we don't have a ton of time, but I do want to get to one question on Ethereum before we take a little break. If we do see ETFs for Ethereum approved in the coming months, which many people think we will see, what are your thoughts on sort of excitement in terms of inflows, given that you can already get exposure to crypto through ETFs and spot Bitcoin ETFs? Will we see the same type of enthusiasm?
Well, listen, we're going to see enthusiasm. What was so unique about the Bitcoin ETF, it was the first time in lots of ways that the US federal government said, crypto's okay. You're okay to do crypto. Even though Gary Gensler didn't want to say it, he said it. And the government said it. Larry Fink said it. Larry Fink is the largest asset manager runs the largest asset management company in the world. And so the credentialization of Bitcoin and crypto, that was kind of limit up. This is a second step towards that. So it's great for the Ethereum community. It won't have the exact same impact, but it'll have a big impact. Right? All of these ecosystems are about bringing new people into the ecosystem, into the circus tent, right? And so this is an easier way for lots of people to participate in the Ethereum community. And so it's nothing but a net positive.
We're going to talk a lot more about Ethereum in the next block. Galaxy Digital founder and CEO Mike Novogratz sticking with us. And coming up next, we're going to have also joining us Coinbase's Jesse Pollack to discuss Base and the Ethereum network.
And Galaxy Digital just turned a 300-year-old violin into an NFT. We're going to discuss.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The promise of technology and the promise of technology, especially in the context of like multi-generational planning, in the context of retirement planning, in the context of like the planning of your financial life, is really interesting and really impactful for people. And so we're really of the belief that opportunity in crypto really is for everyone.
In the advent of the Ethereum ETF, 21 Shares President Ophelia Snyder on the show last week. And a new low-cost Layer 2 blockchain called Base is becoming a major building block for popular apps in finance and social media. Coinbase head of protocols Jesse Pollack created the Base layer and joins us, as well as Mike Novogratz, who sticks with us for this conversation. And Jesse, I think you can look at a lot of different ways here on how people are using Base, but I want to hear from you the data. What does it show in terms of how big Base is actually getting for Coinbase?
Yeah, so Coinbase has always been the most trusted and easiest way for people to access crypto. And I think what we're seeing with Base is the same thing is happening. So in Q1, we saw 8 times more developers start to build on Base, and we're seeing really rapid growth of the number of users who are also transacting on Base. And like you mentioned, they're doing all sorts of things, from payments to commerce to music to gaming. We're really seeing the next generation of the internet be built on-chain on Base.
Jesse, give us an idea of what you're seeing in terms of adoption. I understand developers are building on Base right now, but what numbers can you share with us that show that this stuff is actually being adopted by a wider public?
Yeah, so as we reported in Q1 earnings, we're seeing millions of people start to transact on Base. We really still think it's early in the overall adoption, and we're really looking at this similar to the internet era, where over the next few years, we're going to see people go from pretty much doing nothing on chain to doing more and more of their daily life on chain every single day.
Jesse, let me ask you a question. So the $64,000 question really is, what changes in the regulatory framework need to be made before Base can issue its own token, its own L2 token that gets to trade, where the users start to be able to generate their own value and keep value by being a user, right? So we have this whole crypto ecosystem that's been outside of the regulatory framework. You guys are, well, you're often fighting with the SEC, but you're operating as a listed company with regulatory guardrails. What has to happen?
Yeah, so as we've said from the beginning, we have no plans to issue a token for Base. And I think what we're seeing in the broader regulatory environment in the United States is that it's just too unclear for entrepreneurs. And I talk with builders every single day, and what we're seeing pretty consistently is that builders are having to spend more money on lawyers and regulatory guidance than they are to spend on engineering. And that sort of overhead for startups in a country that has historically been known for innovation is really, really bad. And we think that if we don't get that regulatory clarity that we've been pushing for, we're going to see innovation leave the United States and go over shores.
Right. But I guess we had the Fit 21 bill pass, at least the House. It's not in the Senate yet, but the Senate's going to come with their own view. Would something as important as that then allow you guys to say, hey, because there's a tremendous amount of potential shareholder value, locked up in what you guys are doing, and so.
Absolutely, and we're really excited about the shareholder value that Base is starting to generate. As you've seen, it's starting to generate really significant revenue for the business. I think in terms of the regulatory framework, we've seen progress with Fit 21. We've seen progress with state frameworks like the DUNA in Wyoming, and we're really excited to see that mature. And we're confident that as those frameworks mature, we're going to see more innovation from Base and from the broader on-chain economy.
Hey, Jesse, what about the whole issue around staking with the SEC? If there is a larger question around the staking businesses, what does it mean for Ethereum, and what does it mean for the Ethereum network's potential to really grow in a significant way?
Yeah, so we've been obviously working with the SEC on this for a long time. We do not believe that Ethereum is a security, and I think that the regulatory and the courts are starting to clarify that as well. And so what we're seeing for Ethereum is that it's really the beginning of a global on-chain economy. It's creating a new next generation of the internet that's letting creators, that's letting builders do better than they otherwise would have. And so what we're really pushing for is more regulatory clarity in the United States so that innovation can keep happening and we can keep building this future together.
Jesse, one thing that struck me also is that you have the exchange itself, but when you look at Base, beyond the ability for people to build on it, how does it make money at the end of the day? Does it add any financial value to Coinbase, and does it charge anything of the people who are using it or plan to?
So the really powerful thing about Base is that it's a new technology platform. And kind of like the internet transformed the world in the early 2000s, we expect Base and other chains to transform the world in the 2020s and bring about the new on-chain era. And the way that happens is by making it faster and cheaper and easier for everyone to build new things. And when people build those new things, we're going to see an incredible wave of new applications that users are going to use and that they're going to pay for. And Base is the application platform, kind of like AWS, that enables that. So as more applications are built, Base is going to generate more revenue. And as more applications are built, Coinbase is going to be the front door that lets users access those applications. And that combination, kind of both being the platform and being the front door, is incredibly valuable. And it's something that we think is going to generate a massive amount of value for our customers and a massive amount of value for the business in the next few years.
Jesse, what would you say to somebody who's watching right now saying, wait a second, if we're talking about this being built on Coinbase's ecosystem, I'm kind of getting flashbacks to the 90s era of this walled garden of AOL and the idea that Coinbase could be the owner of this platform, and that would concern some folks. What would you say to critics out there who say, you know what, I want this to be actually more open and I want to build on something not associated with any company?
Yeah, well, I think this is one really important thing about Base. Coinbase is incubating Base, but Base is an open, global, on-chain economy that's going to increase innovation, creativity, and freedom. And the only way that happens is if Base is decentralized. That's why we built Base as an Ethereum layer 2, so that we can inherit the decentralization of Ethereum. And that's why, from the beginning, we've been incredibly dedicated and committed to making Base as a technology platform decentralized. And so what we're seeing is that hundreds of thousands of users, tens of thousands of builders all around the world are recognizing that decentralization and choosing to make Base their home because they believe that they want to be a part of the biggest economy that's going to ever be built.
But Jesse, isn't that kind of a half step until you guys can launch a token? Because when you launch a token, it really can be decentralized. But until then, it's not really decentralized.
There's a couple different components of decentralization. On the technical decentralization front, we're making really great progress. Base started as what is called a stage 0 rollup, which is a kind of an early stage of decentralization, but we're in process and very close to moving to being a stage 1 rollup. And what that means is we're going to have a really strong level of decentralization that gives guarantees around censorship resistance, give guarantees around having an open platform for builders that let them actually build with confidence. And so that's what we're most focused on. We're focused on making the technology decentralized so everyone can build on Base and know that it's going to be there forever and they're going to have the same access to it forever as well.
Mike, you have a lot of questions about a potential Base token. Would you be a buyer?
Yeah. It's interesting, right? I mean, hats off to these guys. They've done a great job. The way this ecosystem works is the more people that build, they usually then get more of the tokens, and the tokens go up because they build them. And these are communities.
Right.
And I remember when I really first started trying to talk to people about token ecosystems, I used to use a decentralized version of Uber called Duber. And, then I met Travis later on and was explaining this to him, and he was telling me what it took. And I was like, ooh, that's why Uber got built by him and not by this decentralized community. Maybe now it's time for decentralized stuff. These are really hard things to do, to jumpstart it, to get people using it, and that's where value comes from.
Big thank you to Mike Novogratz and also, of course, to Coinbase's Jesse Pollack. Coming up, why Galaxy Digital just tokenized a $9 million violin from the 18th century. We dive into that right after this. This is Bloomberg.
In a lot of ways, it looks a lot more like a traditional investment bank. Mike Novogratz's Galaxy Digital is broadening its lending business to wealthy clients. And the latest deal is a multi-million-dollar loan backed by a violin once owned by Russian Empress Catherine the Great. Galaxy tokenized the violin in the form of a non-fungible token that was bought last year here by Yatsu of Animoca Brands. We're joined by Mike now to discuss why he did this. And you see the tokenization of the violin. You lent against both the hard asset as well as the tokenized asset. My understanding is by tokenizing it, you are able to kind of lend more here, whereas you need to over-collateralize a lot more on volatile crypto assets. So what is kind of the lending opportunity that this is really giving you, and why do you trust the tokens more?
Well, listen, I mean, some of this, of course, is symbolic, right? Like, it's a $9 million Stradivarius. Catherine the Great played it. And we know tokenization is coming. So we said, let's do something that'll get some eyeballs. Yad is one of the great entrepreneurs. Every time I sit with him, I leave the place and just feel a lot smarter. And he happened to grow up a classical musician. And so he's got a great collection of instruments. And he wants money. So he comes to us for a loan. We're like, okay, we'll take your Stradivarius. This will sit in custody. What's interesting, if these great violins become more valuable if you get the best violinists in the world to play them, right? The provenance of each violin, from Catherine the Great to maybe it's Josh Bell or whoever who gets to play it, makes it worth money. If it's our collateral, they'd have to come to us and ask it. We have a kind of a two-factor authentication with this token. They can't move it unless both we say it's good and they say it's good. And then we can lend the violin out and whatnot.
What can you tell us about the terms of the loan? Like, why come to you for the loan and not go a more traditional route? Because you can take out loans against assets like this and other places.
Because Yat runs one of the biggest digital asset companies in Hong Kong. And most traditional banks are scared of digital asset collateral. They does not, even though this is physical asset collateral, lots of his net worth is tied up in his stake in Animoca and other digital assets. We actually understand the value of digital assets, and so we have a big business lending dollar cash to clients who have
There's
digital
always
assets.
this question in digital assets and traditional lending on what can go wrong. So say tomorrow you have Yacht saying, hey, I want to fractionalize my token. And then the value of that token fluctuates. How do you deal with that?
Well, I think, listen, the clear next step for lots of assets like this would be to fractionalize them. And so that's the excitement of the whole thing, right? I don't think we would have done this if this was the end game. But tokenization is coming, and it's going to come in lots of different ways. Bloomberg Crypto, which is a company we have an investment in, today announced they were tokenizing 10% of an EPL team and selling that off to fans. And so I think someone told me this story about bankruptcy once when I was young. It happens really slowly, then really quickly. Tokenization is going to happen really slowly, and that's the phase we're in, and then really quickly. But mark my words, 2, 3, 4 years out, you're going to see so many things tokenized.
Really quickly here, you have like 20 seconds. Is this one step closer to becoming that elusive Goldman Sachs of crypto?
We go to work every day. We have close to 500 employees, and we're trying to figure out how to make a difference in our industry. I don't like calling ourselves the Goldman Sachs of crypto anymore because the crypto industry is really transforming what traditional finance is going to be. Most of our investments these days are moving more towards on-chain.
Right.
And as the on-chain world picks up, the off-chain world is going to slow down.
We got to leave it there, bumping up against the clock. Galaxy Digital's Mike Novogratz. Mike, you've got to come back, but not too soon. I don't want you taking my job. That is it for Bloomberg Crypto. Join us again next week. This is Bloomberg.